Ladies and gentlemen, welcome back to the channel, okay? We need to talk. What is happening today? Why our indexes look like they're doing really well, but a lot of stocks are not, okay? We talked about this in the prior videos, but the government is about to reopen, and I'm going to share with you all of the news and headlines you need to know there. But there's still a big question. And the big question is, how is the economy doing? And that we need a little bit of clarity on. But if you're confused, we'll get into it in today's episode. We're going to share all of the news, what's happening in markets. Don't worry. Hit that like button, subscribe to the channel if you have not done so already. And if you guys want to come trade with us, come invest in these under the radar AI stocks with us and alongside us, check that link out down below in the description of today's episode. But without any further ado, let's get started. Now, in the news today, the Trump administration has suspended a probe into China's shipbuilding industry, prompting Beijing to reciprocate by shelving its own investigation and putting off special port fees for U.S. vessels, per Bloomberg. So looks like, things might be headed in the right direction for U.S.-China relations. In the news today, the government shutdown. The House will vote on the Senate deal as soon as possible, Speaker Johnson says. House Speaker Mike Johnson called for the House members to travel to Washington, D.C. so they can vote as soon as possible on a Senate deal that would end the longest U.S. government shutdown in history. Johnson spoke to reporters a day after the Senate narrowly approved the first stage of the deal to reopen the government for the first time since October 1st. To end the government shutdown, the House needs to pass any deal that survives Senate votes. President Donald Trump would then have to sign it into law. Johnson indicated to reporters that he expected votes in the House to occur this week, but he did not state a specific day. He later told a Republican House conference during a call that he would like the vote to occur on Wednesday, although that is contingent on the Senate voting for it completely by then, according to a person familiar with the situation. The speaker said he would issue an official 36-hour notice before the House votes. Johnson said, quote, "There'll be long days and long nights here for the foreseeable future to make up for all this lost time that was imposed upon us." Johnson has kept the House out of session since it passed a continuing resolution in September to fund the government through mid-November. Senate Majority Leader John Thune, speaking on the Senate floor Monday morning, urged his colleagues to vote as soon as Monday to send the deal to the House. Quote, "Let's not pointlessly drag this bill out," Thune said. "Let's get it done, get it over to the House so that we can get this government open." Saying, quote, "I am grateful that the end is in sight. I would encourage every member of this body, Democrat or Republican, pro-bill or anti-bill, not to stand in the way of being able to deliver the coming relief quickly." Quote, "The American people have suffered for long enough. But any one senator can delay voting on the bill for days with procedural hurdles. But a vote can be held quickly if the entire Senate agrees that it should happen." Now, the Senate deal would fund the government through the end of January, reverse all shutdown-related layoffs of federal employees, and guarantee that all federal workers will be paid their normal salaries during the shutdown. The deal also includes provisions for a bipartisan budget process and prevents the White House from using continuing resolutions to fund the government. CRs have been repeatedly used to avoid government shutdown, but are controversial because they frequently avoid lawmakers having to make decisions about long-term funding of the government that a normal budget would resolve. The deal would also fund through September the SNAP program, which helps feed 42 million Americans through food stamps. And you can see in your broader markets today, the Dow is up 0.88%, S&P up 1.62%, NASDAQ up 2.32%, Russell 2000 up 1.43%. So the NASDAQ is really leading here today, but it was weird. The markets opened pretty strong, and then you kind of sold off throughout the day, and then you kind of rallied back into the end of the day today. And there's a big reason for this, and we've been talking about it on the channel for quite a few days now. And the reason for this is simple. One, the government is not technically open yet. Now, the shutdown looks to be in sight, and markets price things in ahead of time. That's fine, okay? I was expecting a day or two of a rally once the government reopens. But after that, it's about where is the economy at, okay? If the economy is worse than expected, stocks are going to continue to sell off, right? It's going to be a rough market. If the economy's better than feared, then that's where you get this year-end rally. So even when the government gets reopened, we still have zero clarity on what's happening in the economy. And that's the real question, whether or not we have a year-end rally or not. Now, we are going to be getting some economic data coming out this week if the government shutdown is indeed resolved this week, okay? So we do get the ADP employment change weekly coming out Tuesday at 9:15 in the morning. You have the NFIB business optimism index tomorrow as well. Wednesday, you just get some Fed speakers, Fed Moran, Fed Bostic, Fed Williams, Fed Paulson, Fed Waller. Thursday is when you start to get more economic data. You will get the core CPI, so inflation numbers, month over month and year over year, and initial jobless claims, a bunch of them, okay, if the government does actually reopen, okay? So Thursday could be a big day. Friday, you're going to be getting retail sales, PPI, okay? Now, retail sales is going to be really important because that's going to give you a much clearer picture of, how is the economy doing besides just company earnings, which I believe company earnings are better than any BLS data we could get. And company earnings have given us a green light that this economy, while it's not great, is not recessionary at the same time. Okay. That's my opinion. That's my perspective. And the markets don't have that opinion or don't have that perspective. The markets think we are near a recession right now. Hence why small caps and AI and the risk on trade has sold off so much in the last 5 weeks. I personally believe we're going to get this government opened at some point this week. And then we're going to get this economic data that's going to show, oh my gosh, the situation's not as bad as we thought. See, on Friday, the expectation was negative 60,000 jobs. So, to get the markets to continue to crash, you need to see the jobs report worse than that. If it's better than that, it could be negative 50,000 jobs. That's still bad, but that would be better than feared or better than expected, okay? So I think the bar is really low. And although I don't think we're going to have 100,000 positive jobs for last month's jobs report, I don't think it's going to be negative 60, 70, 80, 100,000 jobs, right? I think that's way too negative. And that's why stocks have sold off, because people thought we were going to have negative 60,000 jobs. Here's the deal. We should be getting the jobs numbers a couple days after the government reopens. So if the government reopens on Monday, today, tonight, tomorrow, we're going to be getting those numbers by the end of this week. Even if the government opens on Wednesday, we might get the jobs report that we were supposed to get on Friday this week. If it's Thursday or Friday, we might not get the jobs report until Monday. And that's what I think really sets this market up for a year-end rally, is the better than expected jobs report that is coming. Now, if CPI comes in low on Friday, which if the government reopens on Thursday, we should get that data, okay? Then that also is an upside catalyst, a big one at that, for this market. But just to put this into English again, okay? We need to get the government open. That's good. You stop some of the unnecessary economic harm. That is good. That, I think that gives you a day or two of a strong market, maybe another day or so. I wouldn't be shocked by that, okay? But it's not going to give you the year-end rally. You need the economic data to show us the economy is not in a recession. If the economy is in a recession or worse than we already think it is, which, again, I think is difficult, okay? I think it's highly unlikely. But if it's worse than expected, you're going to see a larger crash. You're going to see more rate cuts from the Fed. You're going to see more stimulative measures, okay? But if it's better than expected, maybe CPI and some of your other data determines the path ahead for the Fed. But if the economy is better than expected, that gives the green light for stocks into the end of this year. Now, also in the news, Donald Trump has started to throw out the idea of a 50-year mortgage in the last couple of days. The idea is If you look at a 30-year mortgage versus a 50-year mortgage, the payment should be maybe 35% cheaper, which allows people to get into homes easier. White House senior advisor Hassett on the 50-year mortgage says that he supports Trump's idea. Trump says payback numbers in tariff revenue and investments would be in excess of $2 trillion. Trump says a national security catastrophe if we pay back the numbers that are realized. And Thune says it is unclear if we can vote today, which would be, I believe, the House, Senate, who cares, okay? Markets just know the government is about to end the shutdown soon. The CNN Fear and Greed Index today is coming in at 32, which is still not even to the midpoint of fear. So this market is still pretty bearish. You know, people are not convinced that this is the start of a larger rally. I mean, look at the comment section of this video. You're probably going to see quite a few bears out there, okay? Which is a very bullish contrarian indicator. When the CNN Fear and Greed Index is this bearish, you typically want to be buying stocks, okay? And I think this time is no different. Now, market momentum is greed. Really, that's because of the Mag 7. The Mag 7 are leading this market today. In fact, midpoint today, out of the S&P 500, over 320 S&P 500 stocks were in the red. 200 and like whatever, 70, 30, 50, 2 something were in the green. That's it. So a majority of this market was actually declining today. So some of the outsized gains you see in like the NASDAQ are really just coming from the Mag 7. Tesla, Nvidia, you get the idea. Now, stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral and safe haven demand in greed, and junk bond demand currently in extreme fear. We can see the probability for a rate cut coming in December is 57.8%, and the odds of a pause at 42.2%. So these odds are going to go back and forth, but it's about 50-50 right now. And it'll be interesting to see what happens, because I think the economy is going to show it's not as bad as feared, but I also think CPI this Friday is going to come in better than expected. So how does that kind of push and pull on the odds of a rate cut? We'll have to see. The percent of stocks trading above their 50-day moving average today coming in at 42.22%, which is up 11.22% today. About almost 4.5% of stocks are breaking above their 50-day moving average today. So this is a pretty strong breath thrust for this market, which is a good sign. Again, at the end of the day, you have to get the government open, number one, which looks like that's going to be coming soon. And number two, we need to see the economy as better than feared. If the economy is as bad as Wall Street thinks, like, I would be shocked if stocks can do well into the end of this year. We were expecting negative 60,000 jobs. That is pretty damn recessionary last I checked. And you're not going to have a strong market with those kind of numbers. It will prompt the Fed to cut rates, but that doesn't matter if you're heading into a recession anyways. Now, last but not least, we do have some earnings today and after hours with Rigetti, CoreWeave, Big Bear AI, Rocket Lab, AST, TeraWolf, Plug, Oxy, Microvast, and some others. Throughout this week, you're going to have more of your AI names, your, inference names, Nebius, again, Tuesday pre-market, CoreWeave today and after hours. You're going to have Beyond Me, Oklo, and some others tomorrow as well. Wednesday, Circle, Arcos Dorados, and after hours, Cisco. Thursday, pre-market, Walt Disney, Bitfarms, JD.com, Billy Buy, PaySafe, Gambling.com. And then after hours on Thursday, you have Red Cat, Applied Materials, New, and some others like Virgin Galactic. So we have a lot of smaller cap companies over the next month or so that are going to be reporting earnings, and a lot of your AI trade. So keep that in mind if you are invested in those areas. As said, ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you have not done so already. come join us. Link down below in the description of this video for the trading community, okay? We are going out to find the next big winners in AI. We actually bought a brand new one today that is pretty damn exciting. They have a partnership with IBM. They're doing a lot of cool things, okay? Just the way they run that company is pretty unique. So, yeah, come join us. Come see the stocks we are investing in. Come get involved in the community. See, AI is not a bubble right now. AI is not something that's going to be gone in 3 months. AI is going to be around for decades. And we are positioning today in the stocks that we think are going to be 10, 20, 30, 50, 100x winners over the next 1 to 3 years, right? These are under the radar stocks that Wall Street is ignoring, likely because they're just so small. A lot of Wall Street firms can't even invest in those really small companies to begin with. So yeah, that's where I think the best risk reward is in this market right now. So that is it, ladies and gentlemen. Have a great rest of your day, and I will see you in the next one.